Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, I will get that video fixed. Good morning, everyone. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you. We're wound up this morning between the Fed decision and a couple of guidance headlines, a couple of buyback headlines. Roku had quite a day yesterday. Overstock, the CEO, sold nearly all, if not all, of his position. We'll talk about Beyond Meat as well, pulling out of Tim Hortons getting out of the Beyond Meat, off the Beyond Meat train. So we'll talk about that. A lot to get to, plus two guests on our show. The first one at 8:15 will be joined by Marc Chaikin from Chaikin Analytics. And then at 8:35 we'll be joined by one of our favorites, Gordon Johnson. It's been a while since he's joined our show. He's just founded his own firm, GLJ Research. He will join us at 8:35 to talk about that and what he's covering. In the meantime, Joel, what's the word here overnight?
Trading mid-range here, pre-market high, right up near the high from yesterday at 1375. That's at 1075. Pre-market low 91.25. We're trading above that substantially at 04.25. We'll talk about the trading range in 1 minute. Crude up $1.16 at 59.19. Gold in the red by 5.5. Silver up 2 cents at 17.94. Bitcoin loses 10,000, down $340 at 9,965. So Triple D, you having some good luck today? You were whining a lot earlier in the week.
I just whine. I'm a whiner. Good luck, bad luck. That's how it goes. But putting it in perspective, so I was on a run. In the summer, I was on a run. I think in my trading account, I'd have to look back, but I think I had 1 or 2 down days all summer. So we're talking like 2.5 months where that's a run. Like usually I get a down day at least, usually, I don't know if it's once a week, but at least once every couple of weeks I get a down day, but I was on a run. Anyways, I've had in September, I've already had 4 down days. And I had back-to-back down days, Monday and Tuesday. So that's why, you get a little bit upset with yourself, what's happening. And obviously it was a bad run of luck. Of having some overnight positions that are just going against me the week before Oracle reports early, and obviously get slammed on that because I had it going into it. So, things like this happen with your trading. But, you bounce back. I'm still green for the month. It's not going to be a great month like it was in August, but I'm still green. I'm under average, obviously, with all the down days, but I'm still green. So hopefully my months of profitability can stay intact.
All right, we got a lot of news here.
There's news just breaking here.
Yeah.
I don't know. It's a small stock. Eros just signed a deal with Microsoft. And if you're looking at it, it's up 31% here right now. This just hit at 8 o'clock, so 4 minutes ago. And the stock is ripping here in the pre-market. It's a stock that's been in the gutter. Was down to $1 just a month ago, and now we're looking at a 334. So getting a nice lift here, Eros.
What is it?
Spencer, you got the details on this one? It just broke in the press release, came out at 8 o'clock.
I'm trying to read through the PR.
There you go, PR.
Yeah. So they're a media company, Eros here, as I search for it quickly. They're going to develop a online video platform together. So they're a Chinese company. They're
all you need to know.
Listen. They're a Chinese or South Asian, I should say, over-the-top streaming company. So they're essentially like Roku, but for Asia. I'm gonna say that right off the bat.
I remember somebody mentioning this stock, and I actually threw this one into my long-term portfolio a while ago, and it was like $12. And then I started looking at it, I was like, what am I doing with this in long-term portfolio? I think I sold it at 11. Good sell, because now, even though it's bouncing here this morning up 25% on this news, obviously it got down to $1 and it's $3. But that's a big headline for them. Anytime you see a small company and gets a pact with Microsoft, it's gonna pop. I'm not surprised getting good lift.
This company is Roku for India. That's what they are.
Yeah. Anyway, I'm not jumping in here and saying this is, the future here, because I was already in there and I almost got killed in it. And any stock that goes to $1 usually goes back to $1. So long term, I don't like just that the stock can go from 14 to $1 makes me think that it could go to 0. I don't know for sure. I don't follow the story close enough, but I mean, it's scary. Obviously, very speculative, but big pop here this morning. Good. When you get a deal with Microsoft, you're going to get a big pop. So I'm not surprised getting a nice lift. The lift could continue. Who knows? But probably long term, it's probably a selling opportunity.
You gotta go through 342. We just hit that, faded back 22 cents. So it's one of those scenarios where you gotta go take out the pre-market high, get that momentum going, get it 354, 455. I don't know, already starting to show a little bit of weakness here. Big old run up too. If you had this thing at $1.40, $1.50 back at the beginning of the month, you're doubling your money here. So let's see it. $3 looks like it was resistance, holds 3, good to go north. And I'm not even going to go on the monthlies here. It had a really bad month. This was back in June. Had a high of 780. So that's what EROS is.
Spinner is giving us, I think this is a sympathy play. Are you giving us sympathy here, Spinner? It's IGC or no, or maybe this is something
He
going
said there's
on its own.
some news on some other little ones.
Well, he was just saying IGC is another one. I'm not sure, but India Global Capitalization.
IGC, don't they have a large stake in Spotify?
I don't know, but the stock's up at $1.35 this morning. I guess we're going on like penny stocks day here, $1.08 up to $1.35. So it's getting a little lift here too. I'm not sure. I don't follow this story at all. So I was just pointing out the Spinner was saying it because maybe
no, that's someone else. No, IGC is a cannabis play. This is not.
Oh, this has nothing to do with it.
No,
Okay.
this is not. No.
I'm not reading all of the chat. It's selective reading on my part.
Okay.
All right, let's move on while I make myself look dumb. Okay, we had 2 huge buybacks, stocks that I do follow and stocks that I do trade daily. 2 huge buybacks, one announced right after the close, and don't even ask me where I bought and sold my Microsoft, but okay, you can ask me. Anyways, give us the details. We got Target also, Microsoft, Target doing big buybacks.
Yeah, stick with Microsoft here since we're already on the topic. Microsoft, $40 billion buyback, and they raised their quarterly dividend from 46 cents to 51 cents per share.
I was on this fast. I bought 138.79, I think, on this news, on this headline. And you know what? I told myself, don't sell it. Don't do FIFO. Alex, I was listening. Your voice was in my head. Alex from Twitter. He always says, you got the FIFO problem. First in, first out. So I knew I was in it good. Obviously, I bought it quick and I was up quickly. It went up to 140.40, like literally like a minute after I bought it. And it sat there and it's meandering around. And I'm like, I should at least wait until they say it on CNBC because usually it gets another CNBC pop. But you're looking at it, and you're thinking, well, it's Microsoft. It is a big buyback, but again, it's Microsoft and it's a huge company. So you start analyzing, you're like, maybe I should just take the profits. So anyway, so I take the 50-cent gain, brutal. And then I watch it run another $1 after, like literally a minute after they say it on CNBC, it runs up another $1. So I should have held it. So I got in awesome. Again, the scalper blood killing me. So I think I bought it like 138.79. I think I sold at 139.25 and 139.35. I just kind of lagged out and then like 139.40. And then literally 5 minutes later, it's up in the 140 handle. So shame on me. Good in. Again, the FIFO problems emerge.
Boy, oh boy, they're buying back stock here.
They're trying to get their stock going.
Man.
It's been hanging out doing nothing for a while. Can this kickstart it to all-time highs, Joel?
Oh, man.
40 bill. And they raised the dividend.
And you don't know if they're doing it right now. There's not exactly sending a market order, right? So
we don't know. They're just saying they're gonna do it.
Maybe saving it on a decline here. It's interesting. It's got the pop and it's really hesitated here. We're trading at 140.25. I see the pre-market high right in this area, 140.50. So someone's unloading a piece here. Snuck over 140 a couple times here in September. So I'll use this 140.50. That's the gateway to the new all-time high, the all-time high. Boy, 3 highs at 140, 140 area, but the all-time high is 141.68. All-time closing high, 141.34. So you're $1 away here. Got to just see someone stubborn there at 140.5, Dennis. I don't know if you can identify them.
Well, maybe it's the person that's been selling it. It's been up here over 140 a few times and never can seem to hold. We'll say guilty until proven innocent because it's going to open up near the all-time high. I mean, we're only going to be $1 off, so 140, 167. So what does it do there? Does it challenge the all-time high? I think it's far enough up it could. But again, you're right, Joel. It's not really continuing to run. It got the initial pop. It ran up fairly quickly to the 140 area. Somehow I sold in the low 139s, silly on my part. But I mean, it's kind of been hanging out here for the entire after-hour session and pretty much the entire pre-market. Yes, the tape isn't helping it overall. The market's down slightly here. I don't know what to say. I mean, this is a big buyback, but it's a big company. I mean, what's it worth? It's not like it's a smaller company. It's worth like 3, 4, 5%. Is it worth more than 1%? Maybe. I have no trade on it at this
Can't
point.
do much about it. If it takes
Yeah.
out the pre-market high, it's gone to the all-time high. Just seems like there's a seller up there, 140 and a half. So I would use that as a potential target.
Let's go look at Target. Speaking of Target, TGT, another buyback.
$5 billion. $5 billion.
$5 billion for Target. Okay, so you look at this one and you think, well, and I'm getting filled on trades right now, so I just need to do some covering as I go.
Okay.
No, yeah, just give your Target thoughts.
They spiked it to 111. Not much volume traded up at 111, kind of hanging out here in the 109 handle, 109, 109.50. I will take a look. Just keep the all-time high in mind, 110.94. We've only been up near that area one time. The next daily high was at 110.27. So there you go. It got a little bit of an overshoot, it looks like, on the initial pop. And the all-time closing high, that still has not, well, we're above it, but if you're looking for the all-time closing high, 109.85. That was your September 6th high. And man, I'm just a little bit puzzled here by these, buybacks at all-time highs. I mean,
it's what they do. How many companies buy the stock back and they're always buying it when they're, and obviously because it's going well for them. They're looking to deploy capital. And they're like, oh, we're just going to buy back our own stock. You see this a lot of times where the buybacks happen when the stock's at the high. Sometimes they go higher afterwards, and sometimes we look back and say, hey, like in IBM's case, that was pretty crappy buybacks. But I mean, Target's 110. That's the number. That's what you want to see. It's bumping its head up against there right now. Can it get through it? That's the question. But it's a pretty decent pop for Target.
okay.
So that's your two buybacks. Now moving on, we've got other stocks, and I want to go to OSTK.
Okay.
Because I don't know if you can show the Edgar filing, but the former CEO, what's this guy's name? Bernie?
Patrick Byrne is his name. I will pull up the filing.
Weekend at Bernie's. Okay, Bernie.
So I'm going to pull up the filing. You can see it on Benzinga Pro, and I want
to show it.
There's a lot of numbers to look at. It can be hard to follow. I want to point your attention. Teach us. This column here, and so column number, I guess.
We're teaching you how to read Edgar filings there this morning. We do it all here on Pre-Market Prep. Benzinga does it all.
So this is like column 4, and then this is like column 5. And what do these two columns tell us? A, how many shares he's selling. B, how many shares he has left. Look at the bottom row here at 918. How many shares left? 0. Sold all of it.
So former CEO sells, maybe because he's former CEO and he's just done with it. Sells 1.5 million shares on September the 16th at $21.83, and then sells another
2 million and then 1 million.
So I don't know what the 87,000 means of 0, but maybe you can teach me what that means.
I don't know what that is either.
It looks like he sold stock at 0. That's not a good price.
I'm not sure what that means.
So I don't know what that's all. But 2.1 million, 1866, then another 1 million, 60, leaving him with 0. So he's out. He says, no more, no thank you. I don't want any Overstock. So former CEO sells his entire, 90 million worth? How much that all add up to? Sell for like $90 million worth he sold. 90. That's a huge sale. Anyways, not surprising. Stock's getting rocked here again this morning. This went from bliss to something that rhymes with bliss and starts with P in a hurry. $30. This was $29.75 4 days ago. It just had a 2-for-1 stock split, but you didn't get the extra shares. $14.90. Wow. Straight up, straight down. That's a mess. Now, that being said, you have one major support level, and that is a low of 14.72. Can that hold? I mean, it is down 8% into it. That's the level that's critical for this to hold. I don't know if it bounces there or not. I was trying to call a bounce in Roku yesterday. That didn't work out so well. So I don't know if have the guts to call the overstock bounce here, but that's the big level. We'll say 1472.
Yeah, right there. I see that low 1472. If it goes beyond that, pair of lows at 14 even, 1403, another low at 1429. So if the buyers don't step up 1472, if you're looking to bring a short in here, I think you'll find buyers in the lower 14 handle.
And Jimmy Vegas, with the point of clarification, the 87,000, that was him exercising some options.
Gotcha. So that's the option exercise. So you could turn around and sell it.
Right. I had a hunch, but I wasn't sure what.
Yeah. So he's exercising those options just to turn around and sell all the shares.
Right. Exactly.
So anyways, he's out. He's out. So big move down here on this news. It's kind of already priced in. It was interesting last night, and I do see these come by. I mean, all you have to do is change your Benzinga Pro. Make sure you add press releases to it, and you will see these come. What do you have to do, Spencer? You tell me.
Yeah. So I'll just
make sure you add the Edgar filings and the press. Right. Show how you get these, because you can get this right away. Right from the filing, and then obviously people have to read it. News feeds read it and then interpret it for you.
So this is
if you're fast, you can make money off these.
It's like your main news feed. All you gotta do is go to sources, make sure you got SEC checked. And
there you go.
Your PRs and your newswire and all that.
Yeah, because Benzinga is going to give you their stuff that they're obviously interpreting on the other things. But once you add the press releases, then you get the company actually, hot off the press. So you want the press releases and the SEC stuff, and the SEC is going to get you the Edgar filings.
SEC filing.
So if you look last night, go to Overstock and show what time this broke. You can see right there, 5:03. And if you go and look at the tape, it actually traded up on this briefly. I don't know why, but it went up to 1650 on this news, and I was like, I don't get that, but I actually went and looked at, and I couldn't even find a locate on the thing. I don't know why last night. I didn't look very hard.
It is 8:17. That's a great point, Joel. We're getting carried away with our overstock. So let's bring on Marc Chaikin
right overtime now, with overstock.
As we get carried away with the overstock selling here. Marc, good morning.
Good morning. How are you guys? You're overtime with overstock.
Exactly.
But this is a great lead-in to one of our favorite stocks that really took a big hit, FICO. And if you put up the daily chart, two things stand out. A, the stock had been a great buy on dip stock. We all know it because it's our credit score, but an enormous 70 plus PE ratio. So at that peak that it made 2 weeks ago, Chaikin money flow was negative. That is the kiss of death. And we kept getting calls and emails saying, well, what's going on in FICO? I don't get it. Is it, Fannie Mae going public again? It turned out that on September 5th, executives sold 550,000 shares up at 360, almost $200 million worth of the stock. It wasn't on any news wires, quiet as can be. Couldn't find it it took me a week to find it.
Wow.
So insider trading can be really powerful. And I think when the momentum investors saw that the management didn't believe in the stock up at 360 at 75 times earnings, they just left the party and stopped, pulled the bids. So I think this is really important. In the Chaikin Power Gauge rating, this is one of the 20 factors. It turned bearish on FICO on the 6th of September. It took a little while for the databases to pick up the selling, but really important. You're absolutely right. You have to have a way to monitor this, especially in the high flying stocks.
What do you think turned it, Marc? I mean, on the 6th, it made a new all-time high at 73.24, 373.24, and it closed an all-time high.
The next day, the insider filings showed up the very next day. And as soon as the public, not the public, it's the pros that see this, as soon as the hedge funds saw that the insiders, and this isn't just a little bit of selling, this was almost $200 million worth of stock. That's major.
I follow all these Edgar filings, and I will say, and I know there was an article that Benzinga wrote about it, just outlining what I said on the show maybe a couple of weeks ago or a month ago. But the buys are very important. I will say, when you see a CEO coming in and buying the stock, especially if it's been in the gutter for a bit, it's a big vote of confidence. And on some of these smaller ones, they can really move the shares. The sells are wishy-washy. If they're small sells, it could be just nothing because, maybe he's just booking, maybe he just needs some money. You get these CEOs that have a $90 million position. If they sell $1 million, it's really nothing. When the CEO like Overstock has a $90 million position and he sells the entire 90 million, that's a different story. So it's all about, kind of, being able to interpret that as well. But you can't just like hit the sell button because you see a CEO sell. It depends on how big it is, what's the situation, why, and often you don't know why they were selling. But, there's only really one reason to buy, and that's to obviously take advantage of you think your stock's going up. That's why I think the buys are more important than the sells. But in some cases, when the CEO sells at all, or a significant amount, like you're saying in FICO, it can be, a precursor to what's to come.
Well, in FICO, it was 5 different executives.
That's important too.
That's important. And they claim that there was a window that they had, prior to earnings where they had to get out of the, stock if they were going to sell it. So the next earnings report is going to be an interesting one, because you sort of wonder if they thought the next earnings report was going to knock the socks off Wall Street, why would they be concerned in selling the stock? Next earnings report is November 7th, so there's a long time between now and then.
Let's move to the Fed yesterday there, Mark. And obviously, they did, we didn't know. It's kind of a coin flip whether they were going to lower or not. They do end up lowering a quarter. Maybe the commentary going forward was saying maybe they were like, that's more like a one and done. I think the market at least interpreted it that way too. What are your thoughts here first on what the Fed has done? And then secondly, what does it mean for the markets?
Well, in my weekly market letter on Sunday, I said they're going to cut 1/4 point, and that's likely to be the last cut of the year. And the reason is the economy is strong. And Powell actually said that in the after comments, which is why the market rallied big time from those, lows at around 230 into the close. Basically, what Powell said was, this is it for now, unless the economy weakens, in which case there'll be a series of rate cuts. But to me, the tell was the day before, when housing starts made a new 12-year high. If the consumer is strong, retail sales are good, whether they're on the internet or in bricks and mortar, doesn't matter. It's still dollars spent. And housing starts are at a new 12-year high. There's no recession. The economy is okay. It's chugging along, creating jobs. And so I don't think there'll be any more rate cuts this year unless some exogenous event submarines the economy. I don't see that happening. So I think we're done for now.
What do you make of the market action? Like yesterday on the headline, we sold off significantly, but then we rallied all back by the end of the day and almost closed at the highs. We've sold off again here overnight, but again, we're seeing the same story. The buy the dip mentality continues to come to this market. We're trying to go green here once again as we're talking. What are your thoughts here on where the market goes from here?
Well, we're overbought on the S&P, on the small caps, which really outperformed last week in a big, big way. The large cap brethren, but we're in a period in September, this last 2 weeks of September, where the market can go either way. So I'm looking for a seesaw market, but there is clearly no selling pressure in this market. I think what happened yesterday is the algos who read and parse the headlines saw negative stuff, this is it for now. And then Powell, who's finally learned what the impact of his words are, gave him very measured and reasonable. I mean, he's basically reasonable. He said, if the economy weakens, there'll be a series of rate cuts. Right now, we don't see that. And I think that's why the market rallied. Strong economy. Why in the world would you sell stocks when your alternative is bonds that are really going to take it on the chin?
We're on the line with Marc Chaikin of Chaikin Analytics, who joins the show every couple Thursdays, give us updates on the market. Mr. Chaikin, you've been through a few quad witch expirations in your day. Boy, oh boy. I mean, are we just winding up here for like a huge move today or tomorrow? We've been in this extended trading range. We had the Fed meeting. I mean, I'm looking at the range over the last 3 or 4 days, and we are stuck here. You're looking for some fireworks, either today or later on tomorrow. Because how do you go a whole week in a quad witch and not have some kind of shenanigans going on?
That's a really good observation. I think if you look back, the September expiration is a little different from the other 3. So, and particularly because September is that, period when markets often are in the bottoming phase into an October low. volatility is low. You know, you've got the VIX. I know it dipped under 14 a few days ago. I doubt that it's rallied very much. I didn't look at it this morning, but with VIX low, I don't think you're going to see fireworks here.
All right.
Jumping back. I just wanted to take it over, and we had a couple big buybacks here this morning, Microsoft and Target. We were just talking about them a few minutes ago, but what are your thoughts here just on buybacks altogether? I mean, how, you know, and first of all, I don't know if this is something you track closely or not, or if it is, but we are seeing, you know, a lot of buybacks this year. What are your thoughts on this, as you know, the market's still near all-time high, so a lot of these stocks like Microsoft and Target are buying their stocks right near their all-time high. What are your thoughts on this?
Well, Microsoft authorized a $40 billion buyback with no time frame. So,
right.
You know, they're not dumb. Well, maybe they are, but they'll buy the stock back, you know, on dips when they think it's attractive. Same as Apple. Apple has timed their buybacks beautifully.
How much of, and it's a good point you're making here, how much of the buying on the dip, you know, that we continue to see, you know, especially in some of the mega caps, could potentially just be the companies themselves using that dip opportunity to employ the buyback that they authorized?
I think that's a good observation, unless you're in the, you know, the quiet period around earnings, probably the case. Why don't we focus on stocks that people can be buying here? Because I think the landscape has shifted dramatically as of a week ago Monday. So I've got a couple of names I wanted to talk about and some themes, if you're up for it.
Yeah, let's do it.
Well, let's start with one that I'd be really leery about. Micron reports after the close today. It made a new high with Chaikin money flow negative. Power gauge rating is neutral. It's the same pattern we saw in FICO. I'd be really cautious heading into earnings. But AMAT and Lam Research look really good on the charts. Bullish power gauge ratings, making new highs. So I think in semiconductors, you got to be selective. Broadcom has a bearish rating, but AMAT and Lam Research look great. I like the beginnings of saucer bottoms, cup and saucer in the biotech and some of the better quality drug stocks. So Biogen and Bristol Myers are starting to show that saucer bottom pattern. They're starting to outperform the market. That's what we call a bullish personality change with bullish power gauge rating. So it's the early stages. If we're going to go up to my target of 3,100, 3,200 by year end, I think it's going to be financials and biotechs that are going to take over the leadership.
I mean, this is the rotation that we've been seeing. It's from the high PE stocks to the low PE stocks in the last week or two. So you think that might continue? I mean, we've seen Roku just get annihilated here in the last week and a half. Shopify, the same story. These, you know, stocks that are trading with ridiculously nosebleed multiples, or, you know, in some cases don't even make money, have come in, where you've seen the value trade come back. And, you know, obviously you got Biogen, I think, trades 6 or 7 times earnings. Maybe it's 8. The banks, a lot of them are trading 8 or 9 times earnings. So is this a valuation call from you? Do you think like the low PE stuff remains in favor then?
It's also a technical call, because if you look at the charts, you've got a really nice saucer bottom moving through resistance in a gentle way. These aren't dramatic moves, which is great because you can get in on small dips. But I do think that the trends that started a week ago Monday out of momentum and growth into value and small caps are going to continue into year end. I think these are big tectonic shifts, and they don't just reverse overnight. You know, when this happens, and I think interest rates are the reason, by the way, and a couple of analysts have alluded to that. When the 10-year Treasury bottomed at 141 and then rallied 47 basis points by the end of the week, that basically sent a message that the hockey stick move in bonds was over. And I've been saying this for a while, that this is a very crowded, very risky trade. And when interest rates are moving up, investors are not willing to pay a premium for growth or momentum. But one thing people should realize, momentum doesn't mean high tech. You had momentum in utilities. That's over. You had momentum in consumer staples. I think that's over. So I think you really have to look at strong industry groups like aerospace defense, like biotech, and home builders, for instance, and that's where you're going to find buying opportunities. I don't think you can routinely buy the dip in stocks that we've liked previously, like FICO, Visa. Cadence has rolled over. A lot of the software stocks have rolled over. So I think it's a different game, and people have to realize that. Otherwise, they're going to be trading stale merchandise and get caught up in, momentum unwinds.
Just to clarify, Micron is next Thursday after the close, not today.
Oh my God!
Other than that,
you know what?
Well,
I was actually on the wrong week. Maybe you're doing the same thing. I was on the wrong week yesterday. I was looking at my calendar and I was like, oh, I have this tomorrow. And for some reason, I was on the September 25th week. I was in my iPhone calendar. I was on the wrong week. Maybe you're doing the same thing I was.
You mean today's not the 25th?
that's what I was confused with too. I'm losing. Thanks. It's been a tough month. I'm losing weeks here too.
Thanks for the clarification. You're absolutely right. It's the 26th. Yeah, I'm in the same camp here, but. I think there are opportunities in the market, but obviously with the S&P, banging up against new highs, you don't want to be aggressive. You certainly don't want to buy breakouts because that's not going to work in this climate. You've got to buy pullbacks, but again, not in the favorites that we've been talking about on the show. That game has changed. It was a great game. Hopefully people took their profits and money off the table, but it's pretty much over in my view. And as I said, the shift into financials, biotech, some of the real estate service stocks like CBRE, Comcast, a nice safe name, Microsoft we've been talking about for 6 months. So there are plenty of stocks you can buy. They typically have good yields as well. So it's a different ball game. The one thing that hasn't changed, and maybe we'll leave it on that note, energy. I think this rally in crude was a gift for people who are stuck in energy like Oxy and ExxonMobil and Chevron to get out, because if worldwide demand is slowing, which it is, I mean, the worldwide economy is not as good as the US economy, then the demand for energy is not going to be there. And once the dislocations from the drone strikes are mitigated, I think energy is back in the doldrums.
All right, Marc Chaikin is the founder of Chaikin Analytics, spent over 40 years on Wall Street, joins us every other week. Marc, thanks for the time, and we'll talk to you in a couple of weeks.
Couple of weeks it is, guys. I'm moving to Connecticut.
Oh.
Bye-bye Philly, but I'm still going to root for the Eagles. No way I'm rooting for the Patriots.
Okay.
Congratulations.
Thank you. Be good, guys.
Thanks a lot, Marc. All right, 8:33 here. A couple minutes before we're going to grab Gordon Johnson. Do you want to give us any balances?
So they come out at 8 o'clock now. So I don't know when they, I think it was a month ago, they adjusted it. So the imbalances actually come out at 8 a.m. Eastern. So they bring them out a half an hour earlier than they used to, the morning imbalance, because they used to come out at 8:30. So they give you opening price indications right away. But you know what? They're small today. I do see Mo 40,000 to sell. Mo has really been in the gutter ever since they announced that potential being a target for Philip Morris and in talks. It's been straight down ever since. So obviously the premium that they're going to get there isn't, maybe if they do a deal, isn't as much as everybody thinks it's going to be. Geez, the smallest sell balance today, only 88,000 a day. Usually it's 200. AT&T 81,000 to buy. There is a headline on AT&T which we did not discuss. Maybe we take the next 30 seconds to discuss that headline with DirecTV. That's your cue, Spencer.
Yeah, sorry. The DirecTV AT&T saga. Well, I guess you can call it that. AT&T is trying, apparently, according to the Wall Street Journal, to spin off DirecTV. Whether or not this is of their own volition or because of Paul Singer and Elliott Management, we don't really know, but according to the journal, they are trying and exploring ways to spin off or sell the DirecTV unit to anybody. Anybody.
Somebody please take DirecTV. For some reason, they're rallying on this, and I don't see it as even being good news. I see it as desperation for a company that they bought and paid a huge amount of money for, and here we are 5 years later, and they're trying to figure out how the hell to get rid of it. They're saying, oh, maybe even a combination with Dish Network. And Dish started getting a little pop on this last night, but then I believe we had commentary that Reuters said, and Dish, and they were saying there's been no talks between them and AT&T about DirecTV. Dish has their own problems. Why the hell do they want another satellite provider? I mean, everybody's cutting the cord, right? They're cutting the satellite cord too.
Dish and DirecTV had tried to merge in 2001, and the government said no.
Yeah. So, but why now? I mean, I can't see them finding a buyer for DirecTV. Maybe they spin it off, but I wouldn't want shares of that. So I think that's I think it's a dying business.
Yeah. All right. 8:35 here. Let's take a quick break and grab Gordon Johnson from GLJ Research. We'll be right back in a moment here with Gordon. All right, welcome back, everyone. Pre-market prep, Spencer Israel, Joel Elconin, Dennis Dick, joined now by Gordon Johnson, as I mentioned before the break, founder of GLJ Research. Gordon, good morning.
Good morning. Thanks for having me.
Mr. Johnson here, you started a new firm here. You just want to give us a quick update on GLJ Research.
Yeah, sure. We haven't officially initiated coverage, so we can only talk about industry stuff today. But along with my partner, James Bardowski, we've launched GLJ Research LLC, and we're very excited to bring differentiated, deep analysis to our institutional clients and try to help provide insights for, guys like you and some of those in the investment community.
Fantastic. We love your input. So we're just going to we'll go broad here a little bit. We'll just spend a minute or two, get some comments on these sectors or these themes here, and we'll get through them. U.S. macro outlook.
Yeah, so when we look at the U.S. macro outlook, I mean, you've seen the U.S. ISM recently turn negative. And if you look at, we track a number of global manufacturing, essentially countries and what's going on there with respect to PMIs. And 63% of the major global PMIs we track are trending down. You look at things like construction growth in the U.S. or, trailing 12-month capital goods orders, and they're all looking down. You look at, some of the guidance given by FedEx, by some of the steel companies, most recently X last night and earlier this week, Nucor. Nucor. And the guidance being given is not great. So we think that while the viewpoint is that the U.S. is strong, there's a reason why the Fed has cut rates a couple of times in the past few meetings. And we think that the weakness in global economies may be spilling over into the U.S. And you can see that, again, evidenced by a number of different data points, guidance from companies, manufacturing data, ISM, construction starts in the U.S., all trending negatively year-over-year growth.
All right. So if you talk about U.S. macro, you got to talk about China macro.
Yeah. So when we look at China macro, that's a great point. So, so effectively, you guys remember very clearly in 2016, a lot of the bearish camp was calling for a hard landing in China. And for a short period of time, 2 to 3 quarters, the bears looked right, including us. And then the bears got smacked in the face when Xi Jinping came in and unleashed the kraken of stimulus, if you will, ahead of him becoming the essentially dictator for life in China. We believe he did that to, basically make growth look great. But the problem is when you basically pour money into an economy and you're building things, empty office buildings, et cetera, effectively your debt service grows. And by our calculations, in 2016, the essentially credit required just to service China's debt was under $1 billion. And now you're looking at, $1 trillion, CNY $1 trillion. And today, however, given all the debt that's being issued, China needs to basically issue on a monthly basis just under $2 trillion in credit just to service its debt. So we believe that the credit that China is issuing is not finding its way, right? TSF on a monthly basis is not averaging above $2 trillion, meaning that credit isn't finding its way into the real economy. And that's having a very negative effect on growth in China. You can see this from a number of different data points in China. PMIs for Caxton, or the official PMI, the still PMI in China, new starts in China, property transactions, all of these things are trending down. The Li Keqiang index. I mean, there's just hundreds of data points. But the most important data point we believe is credit. And if you look at trailing 12-month liquidity to GDP in China, liquidity defined as TSF plus local government debt, in 2015, right, that ratio fell 63 basis points. And that preceded the great global commodity scare. In 2018, that ratio is down 83 basis points, so even scarier than 2015 dynamic. So the question is, what does that mean for 2019 and 2020? We think it means slower growth in China, right? The government came out just recently in China and said 6%, maintaining 6% growth is difficult. We think that's, we agree 100%. But we think that given China consumes 50% of the world's, still roughly 50% of the world's iron ore, 59% in the second quarter of the world's battery electric vehicles, and so on and so on. As growth slows in China, we think the rest of the world is going to catch the flu. And we don't think that's consensus right now from an industry perspective.
Just going quickly back to the U.S. macro here, do you find any solace in housing starts being at a 12-year high? I mean, that could be good for many different sectors of the economy. What's your comments on that?
Yeah, I mean, there's puts and takes. I mean, there's definitely positives in the U.S. Market overall, right? The U.S. economic backdrop is definitely looking better than global markets, but the U.S. from a industrial perspective doesn't drive things. When you look at things like, if you look at global crude steel production, excluding China, year-over-year percent growth, it's now trending negative. In fact, the year-over-year growth in the most recent period of July was down 2%. That's the weakest growth we've seen since 2015, looking at crude steel production excluding China, right? I'm sorry, 2015. And keep in mind, in 2015, that was right before the global, the great global commodity scare. And when you look at things like, for instance, U.S. steel prices, right? U.S. steel prices recently rebounded just roughly a month ago, all the way up to $600 per short ton. They're now back down to $550. And growth there is trending lower. We know that scrap prices in the U.S. fell $40 in September, and before that, year to date, they were down $103. So steel prices falling, right? Global crude steel production, excluding China, year-over-year growth falling. So we think those dynamics will have clearly negative impacts on specific industries in the U.S., and we think that people are kind of missing the trees for the forest, if you will.
On yesterday's show, we were talking about driverless vehicles and electric vehicles and autonomous driving. Where do you stand on EVs and looking into the future with Gordon Johnson?
Right. I mean, let's just look at the data, right? So again, we don't have any views on stocks right now, but in the second quarter of 2019, China represented 59% of global battery electric vehicle sales. 59%, right? So what's going on in China? Well, in July, for the first time ever, year-over-year growth of battery electric vehicles in China was down 4.76%. However, in August, that number increased to a decline of 16% year-over-year. Battery electric vehicle sales in China down 16% in August. Now, we know the driver of that was the late June cut to China's battery electric vehicle incentive for cars with 250 miles of range. They cut their incentive by 50%. And as we know, incentives drive renewables as well as battery electric vehicles. But when you have 60% of the market, i.e. China, now declining at an accelerated clip, it doesn't bode well for the industry at large.
All right. Well, that's a nice wrap on that. How about solar? You look at FSLR and some of these stocks had some runs, just stalling out a little bit. What's your long and short-term outlook for solar?
Well, from an industry perspective, prices are still falling. And, basically what we're hearing in China is, a lot of people have pegged China at a 40 to 50 gigawatt market, roughly 50% of the global market. And now you have, reputable government sources, contacts rather, that we talk to in China publicly coming out and stating that China is going to be 20 to 25 gigs this year. So that's a big shortfall. Now, the reality is the U.S. market's on fire, and the resi market specifically in the U.S. is on fire, and that's driving a lot of optimism right now. But keep in mind, the investment tax credit falls January 1, 2020. So, look, there's a solar conference next week, a big solar conference in Salt Lake City, Utah, that we will be attending, where we're going to get a lot of insights into what's going on. But the question that needs to be answered is this demand in the U.S. demand pull-in ahead of the investment tax credit cut that takes effect January 1st, 2020, or is it fungible, organic demand? We'll look to get that answer. But on a global perspective, prices are still falling. The outlook in China is not great. PV Insights reported prices pretty much across the board falling again this week when everybody expected, prices to start rising towards Q4. So globally, things look like they're still troubling. People are excited about the U.S. market, but again, we'll get answers next week at the solar conference in Salt Lake City.
Now, you touched on steel briefly, a couple companies lowering guidance here. So you mentioned that, not a good outlook for steel stocks.
Well, we don't have views on stocks yet, but from an industry perspective, there's a number of things that are concerning, right? You have the GM automotive strike, right? And while GM isn't the Bahamas in car sales that it used to be, it is still a Bahamas. And auto is a big consumer of high margin, HRC steel. So, one thing that we've, been looking at is auto production. And auto production has fallen significantly this year versus what we've seen in prior years and was down last year as well. So that's a big headwind to the steel industry. And keep in mind, this is something I don't think a lot of people focus on with respect to the industry. While there are quotas on guys like Brazil and South Korea, their imports into the U.S., if you look at the imports that you get when these quotas reset at the beginning of each quarter, it's a massive influx. And all of that stuff isn't consumed. It's basically stored in warehouses, and when the quotas renew, that stuff is released, again, like the Kraken, into the U.S. market. So you have a big negative catalyst coming, in our view, from an industry perspective, January 1st, 2020, when the quotas for Brazil and South Korea reset, and you have the release of all this inventory into the U.S. market at a time when, domestic capacity is ramping into a down market. You add to that, the weakness in auto. You add to that, the fact that scrap prices are down $40 in September and $103 before that year to date. And the fact that the resurgence in U.S. HRC prices hasn't been able to hold despite capacity reductions. And the outlook just isn't good from an industry perspective. So, we think that the steel industry has further headwinds from an industry perspective on the horizon.
All right, one sector that I don't think I've ever heard you comment on, but a lot of debate about the future of the cannabis sector. Give us your short and long-term outlook for that sector.
So, there's health data, there's Health Canada data that comes out, and it's very interesting data. But essentially, if you look at that data right now, if you just compare, sales to inventory, and you look at the amount of inventory in the market, the Canadian cannabis market is sitting on roughly 2 years of inventory. And another interesting data point, if you look at what Canopy reported in their most recent quarter, I think this missed a lot of people. They took a charge for effectively inventory they had to buy back from the provinces. So think about this, right? They've reported sales, right, of cannabis. And the way it works is if you're in Canada and you're selling if you're a Canadian cannabis company and you're selling in Canada, you don't sell directly to the end user. You sell to the provinces. But if you look at the fine details of the bylaws of the agreements the provinces have with the Canadian cannabis companies, one of those bylaws is if there's excess inventory, the provinces can put back product to the Canadian cannabis producers. Meaning, like, if you're Intel and you've sold chips to Dell, and Dell feels like they brought too much chips, they can make you buy back those chips. I mean, I've never seen this. And we highlighted this early on in our industry coverage, but you saw it actually take effect last quarter when Canopy had to effectively buy back product from the provinces. We think that from an industry perspective, that's a very negative dynamic. And we think from an industry perspective, given prices in the U.S. are kind of around $2, and on average kind of prices in Canada are around $4 per gram, we think that from an industry perspective, you could see some more downside given the excess inventory in the Canadian cannabis space on prices. And clearly that's not great for margins. So from an industry perspective, you're looking at, a Herculean level of inventory, and provinces already starting to put back some of that inventory to the producers. And we think that's really fallen by the wayside, if you will, to Canadian cannabis investors. We think that's a very important dynamic that a lot of people just haven't focused on. And we think it's something that from an industry perspective, people need to focus on going forward.
All right, Gordon Johnson has been on with us. Gordon, next time you come on, I hope we can talk individual names, but founder of GLJ Research, thanks for the time as always, Gordon. We'll definitely have you on when you are able to, when you start your coverage and are able to talk specific stocks.
Absolutely. Thanks, guys.
Can't wait.
Thanks, Gordon.
Can't wait for that.
What's going on here? What's going on in the market? We're exploding here to the upside, up 5 3/4 handles. Just kind of was real quiet, and then we just popped like 4, 5, 6 points. Triple D, you seen anything on the wires? Maybe.
Well, we had an 830 number, which we've been kind of crawling up since then, but it's just been a steady climb. But now we're really starting to go here. I mean, we were down 6 or 7 handles when we started the show, and we're up 5. So we've had a 10-point rally since we started the show an hour ago.
Pretty significant.
Yeah, it's significant for sure. So I mean,
moving. I mean, what's
it's just buy the dip mentality. Even yesterday, you had a dip for about an hour, and they turned around and they bought it all afternoon, or like from 3 o'clock on or 2:30 on, and they basically brought us right back up to the highs. I mean, it's the same thing here. It's just the Groundhog Day around here. They're buying the dips again. Same thing that we saw for years, for basically the last 7 years, and we're starting to see it happen here again. So it's different stocks that are leading. Like we were talking already, Roku is not leading here today. Roku is down another 4%. I'm not even sure if this commentary, if this is follow through or what it is, but you've just got to be aware that, hey, when these stocks start, when it starts to turn, the rotation starts happening, it's different stocks that lead us out. This morning, it's oil. Oil stocks are definitely higher. Oil's bouncing back here from a little bit of a hit yesterday. So if I'm looking at the oil stocks, they're all leading. But there's also a few other stocks. I mean, it's mixed. And obviously we're only up 5 handles, so that's the only sector I really see super strong. But again, it's these Momo names that were getting all the money. It seemed like forever, at ridiculous nosebleed valuations. The money's coming out of those stocks right now, and it's going into lower multiple stocks. So what Marc Chaikin was saying earlier, I completely agree with. We're seeing a rotation. I mean, we're seeing it, and I've talked about my portfolio, my long-term portfolio, which is very cognizant of, PE multiples. I like to buy stocks that are cheap. It's really turned around in the last couple of weeks. I mean, significantly. So I can see it in my own individual portfolio. I mean, it hasn't been good. I've probably underperformed the market in the last 5 or 6 years because I've obviously been more value oriented. It's working right now. I don't know if that turns again or not. I'm not sure. But as of right now, Momo is out of favor, and growth is kind of out of favor, and value is back in favor.
I've got a Momo name for you, Beyond Meat.
Yeah, so this gets a rating here today. I can't understand it. I'm going to probably go on a rant here in a second if you wind me up. But what's the rating and what's the deal here?
So listen up. So yesterday, news broke that Tim Hortons was significantly scaling back their Beyond Meat offerings. In fact, they had pulled Beyond Meat products from all Canadian provinces except for the 2 largest, British Columbia and Ontario. Those are the 2 largest, correct, Dennis? I'm not.
Yeah, Ontario. Okay. Well, Ontario is the main one, I guess.
Right, and then BC. So they've pulled Beyond Meat products from all stores in all the other provinces, and you're questioning this rating today, here is what a analyst at D.A. Davidson said yesterday with regards to this Tim Hortons news. I don't interpret these reports as any indication that interest in plant-based meat at large or Beyond Meat in particular has peaked, as it is way too early to draw any such conclusions. And he noted that they have many other partnerships. So he's not as bearish on this one headline as you are.
That was D.A. Davidson yesterday, and then you get Barclays with an overweight today.
Right. Barclays initiating coverage this morning on Beyond Meat at overweight, gave it a $185 price target.
I can't understand this at all.
A lot to digest there.
You know what, sold to you. I still am going to say, I think when I look at Beyond Meat, I think I said it a year from now. I said it 2 months ago, so I got 10 months to go. I think it's under $100. So I think this is just another opportunity to sell. Could it get some more life here? We haven't had a rating in a while for Beyond Meat, so maybe you want to wait a little bit here before just coming in with your selling shoes on immediately. I think the all-time high is in. I thought it before, and then it continued to show life. It continues to try to hold on, so I can't totally understand that. But I mean, let's just talk about this Tim Horton stuff and whatever D.A. David did. I'm completely on the other side of the D.A. Davidson argument. I mean, here is, and I see Tim Hortons. They're on every street corner in Canada. Everybody goes there. They put these, Beyond Meat burgers in there very quickly. And now they're already starting to pull them out. I mean, okay, they're going to leave them in Ontario, but they're pulling them out of the other provinces. It's not good news. You know why they're pulling them out in the other provinces? Because they're not selling. You know why they're not selling? Because they don't taste that great. To be honest with you, they don't taste that great. So I can't understand how it has this kind of multiple. It just shows the irrationalness of, markets, and stories matter more than fundamentals. But when the story breaks, these things get ugly. We just saw it with Roku. Story broke, the thing gets ugly. This is already broken. You still have believers. You have Barclays, a believer here. I believe they are wrong. I think the stock is lower when I look at it 6 months from now. I think it's lower when I look at it 6 weeks from now. It's still a difficult short. So you have market mechanics where you can't borrow the thing, probably holding it up as well. When this thing eventually gets, through lockup and we get some more shares out there, I think the prices come back in. But I mean, we're at still a point where it's holding on. So you have a technical, trade here. But I'm not participating alongside of this at all.
You're getting a pop.
Of course you are. It's got a rating. I think you could pop even more than that. I mean, I'm actually surprised it's only up 2.4%. I mean, when's the last time we had a buy rating on Beyond Meat come out?
Oh man,
this is a tell in itself. I mean, you get a pretty bullish analyst report coming out here, and it goes up $3. It's not very good. It should be up 10 on that. When we had ratings before, early on, the thing would go up 20 on a new rating. I mean, now that was because the volatility was there in the stock, and now it's maybe not there. But I just don't see. I don't see a significant pop for that rating.
Well, there's not that much coverage on the stock to begin with. So right now, only JP Morgan, they've got overweight. Only JP Morgan, Barclays, and those two. That's it. Just the only ones with the overweight / buy ratings. So there's not a lot of coverage.
Not a lot of coverage. So you would think one analyst coming out with an overweight rating would have more impact than 2.4%. Right. So does it go more, or is there just overhead supply? That might be more of the issue. You have people here who are in this thing and burned. I mean, I've had a lot of people, asking me about the stock. It was a cult stock. It was a story stock. Everybody was interested in it. People buying it all the way up. Those people are caught now. I don't think this is going back to 200. I don't think it's going to the Barclays 187 price. I think all rallies are to be sold, in my opinion. My opinion.
Keep an eye on the pre-market high. The pre-market high comes in at 148.45. I'm just looking at this. I'm just seeing two highs over 160 from the last few sessions. 161.49, 160.49. A close right there at that area. So, I mean, I would be, I'm leaning toward the bearish side here, but if you can get up and, clear that 160 area, I think you got a little bit more room on the upside. But also, a lot of people got caught yesterday on that news, and now you're getting a pop up. You're quite a bit off the low from yesterday at 149. So you could definitely see people lightening up into this rally. And the chart doesn't look good the way it came down off that 220. What was the all-time high? Maybe even higher than that, 230. Wow, 239.71. You want to do one more rating?
Well, we
what
didn't
do you
even
want?
get to RH
Oh,
raise their
yeah.
guidance. So
Substantially.
X cut their guidance, and RH raised
X
their
is the
guidance.
story. I mean,
X-
RH did a little guidance raise. It's moved a buck. I mean, X is a disaster here today. So US Steel's trading down 12% here now. Once a dog, always a dog. Use those opportunities. When you're in a dog stock, use the rallies. And we saw this laggard rally in the last couple of weeks. Use those opportunities to get out of the dogs. I mean, here it is, and it's giving back its entire gain in the laggard rally in basically one foul swoop. So, I mean, once a dog, always a dog. US Steel is just a dog.
All right, 1091. That's currently where we're trading. You did have a low on September 4th there, and then you could just see your daily lows. 1048 was another daily low. The actual low of the move is 1016, so they kept it from going under $10 last time. Not sure we're going to get it there today. Just be aware, a couple lows. I won't say a lot of support though. In the lower 10 handles, and what else? Do one more here. Lombardo 141. Do I think Adobe can fill the gap? Boy, that was, you know how we talked about like that 268 or 269 and 271, and you just call it and said, hey, let's call it 270. 270.02 was the low in that yesterday.
Levels work.
Yeah. Not much, if you're looking for a gap fill, I mean, you practically have it right now. 280.36 was the low from yesterday. So get to fill the gap, looks like pretty easily here. And then it opens up. Let's see if you get back to that closing price at 284.69 from Tuesday. I'm sure a lot of people will be happy about that. But sure, going to get a gap fill there. S&Ps are ripping here. Someone said about selling the open here. I just don't know here. This market's been so quiet. They couldn't take it down yesterday.
Nope.
Going into a quad wedge tomorrow, I just can't see just rip. I don't have any resistance here until I don't know.
I have my buy the dip hat on, not my sell the rip hat on.
Yeah.
So, and I'm obviously I don't have any swing trades on or anything, but just from the trading perspective here, I think we go higher. I think all the dips are getting bought here right now. I don't see, unless we get a trade war headline or something negative, and headline driven market. I mean, stuff can happen, but the trading action yesterday with that dip getting spots and scooped up so quickly tells me money managers want to own stocks here again. And I think you're going to see the dips get bought. So, and I wouldn't be surprised if the rally continues.
Okay, quadruple witching definition refers to a date when stock index futures expire, stock index options expire, and stock options expire. And I don't know if anybody trades single stock futures, but they all expire simultaneously. It's something that only happens 4 times a year. And this one, and Marc kind of concurred on that, this one's been a sleepy one. So tomorrow's the day, and we'll see what kind of action we get.
Getting a big pop in Twilio. It got upgraded today. Splunk is also up because Cisco had put a bid out there for, what is it, Dodog or whatever?
That got rejected.
Datadog, yeah.
Datadog is an IPO today. They said that.
But Cisco tried to buy them.
Right, and Datadog said no thanks, but no thanks.
So DDoG is coming out. Cisco tried to buy them. So this is in the same space as Splunk, which is why you're seeing Splunk get a lift here in the pre-market, at least in my opinion.
All right, that'll be it for our show. Thanks to both our guests, Marc Chaikin and Gordon Johnson. Thanks to all of you in our chat rooms on YouTube and premarket.benzinga.com. Catch the replay of the show on YouTube or catch our podcast wherever you get your podcasts, any platform, iTunes, SoundCloud, Stitcher, Spotify, wherever. Please remember all the information from our show.
Roku lifting right now too. Sorry to interrupt you.
Roku just unveiled their latest product, their latest lineup of new devices. So that could be why I saw the headline a few minutes ago.
Just happening now. Yeah, it was down 5. It was down 6 at one time. Now it's only down 2.
Right. Roku Express $30. Roku Ultra $100. There you go.
Stock is broken. People are caught. I kind of think it's selling. Everything rallies a selling opportunity now. We could rally, but I mean, we're down 60 points in or 50 points. We're down in 10 days. So, I mean, it could bounce, but I think you're still going to find sellers.
All right. Please remember all the information from our show meant to be used as informational purposes only, not for investing or trading advice. questions, comments, concerns, email us at premarket@benzinga.com. Everyone have a great rest of your day. We'll see you on Friday for the final show of the